Picture a man sitting alone at his desk. It's 11:47 at night. The room is dark except for the blue glow of two monitors in front of him. On those screens, candlestick charts, red and green bars stretching across the screen like the heartbeat of something enormous and indifferent. His name is not important. His story is. He has been trading for 3 years, 3 years of early mornings studying charts before work, 3 years of weekends reading books on technical analysis, on risk management, on trading psychology. He has spent money on courses, he has joined Discord groups, he has followed signal providers, mentors, educators. He knows what a moving average is. He knows the difference between support and resistance. He understands candlestick patterns, the hammer, the engulfing candle, the doji. He has a trading plan written out in a notebook. He has risk management rules. He never risks more than 2% per trade. At least, that is what the rules say. And yet, after 3 years, his account is smaller than when he started. Not by a little, by a lot. And tonight, he is doing it again. He took a loss earlier today, a clean trade, a good setup, but the market moved against him. That happens. That is part of trading. He knows this. But he is still sitting there at midnight, staring at the screen, looking for a way to get it back. Sound familiar? Because here's the truth that the trading industry will never put in a course, never put in a book, never put in a YouTube ad. The strategy is not the problem. The indicators are not the problem. The market is not the problem. The problem is something else entirely, something ancient, something that 2,000 years ago a group of philosophers in Athens and Rome identified, studied, and, for those rare few who truly practiced it, conquered. It is called Apatheia. And in this video, I'm going to show you exactly what it is, where it comes from, why it is the single most important concept in trading that almost nobody talks about, and most importantly, how to actually develop it. Stay with me, because by the end of this, the way you think about trading will never be the same. Let's go back to the man at his desk. His name is David, and what David does next is the thing that separates almost every losing trader from every winning trader on the planet. He opens a new trade. No setup, no plan, no checklist, just a burning, uncomfortable feeling in his chest that he needs to recover what the market took from him tonight, right now. He doubles his usual position size because he needs to make it back faster. He sets a loose stop loss because a tight one might get hit and he cannot afford to lose again. And he enters long on a pair that has been in a downtrend for 3 days simply because he wants it to go up. 45 minutes later, he has lost 3 times his original loss. He closes the laptop, goes to bed, cannot sleep, stares at the ceiling, replaying the trades in his mind. In the morning, he tells himself it will not happen again. And next week, it happens again. Now here's what I want you to understand. David is not stupid. David is not reckless by nature. David is not someone without discipline in the rest of his life. David simply has never been trained to deal with the emotional reality of trading. And this is not his fault, because nobody in this industry teaches it properly. Think about what trading actually asks of you psychologically. It asks you to take actions that have uncertain outcomes repeatedly with real money while watching the results in real time. It asks you to cut positions that still feel like they might recover. It asks you to sit on your hands when everything inside you is screaming to do something. It asks you to take losses with the same emotional neutrality as you take wins. These are not natural human responses. They go against millions of years of evolutionary programming. Our brains are wired for immediate action in response to threat. Our brains are wired to avoid loss more than to seek gain. This is called loss aversion, and it is one of the most well-documented phenomena in behavioral psychology. When you lose a trade, your brain doesn't process it as a business expense. It processes it as a threat, as danger, as something that must be fixed immediately. That's David at midnight. That's all of us at some point. The question is, what do you do about it? And the answer, The real answer was written down over 2,000 years ago by a group of people who had never heard of the Forex market, never seen a candlestick chart, never touched a trading account, but who understood human emotion and how to master it more than almost anyone since.
Around 300 BC, a merchant named Zeno of Citium was sailing from Phoenicia to Athens when his ship was wrecked in a storm. He survived, but lost everything: his cargo, his livelihood, everything he had built. He arrived in Athens with nothing. And what did he do? He walked into a bookshop, picked up a book about Socrates, read it in one sitting, and decided that philosophy was more important than wealth. He began teaching in a public space in Athens called the Stoa Poikile, the painted porch. His followers became known as the Stoics, named not after a principle, but after a porch. And what they taught, what consumed them, was a single question: how does a person remain calm, rational, and in control of themselves when everything around them is chaotic and out of their control? Think about how relevant that question is to trading. The market is chaos. Prices move based on factors you will never fully understand or predict. News drops without warning. Central banks shift policy overnight. A tweet from one person can move a market by 3% in minutes. You will take setups that look perfect and lose. You will take trades you almost didn't take and watch them run 500 pips in your favor. You cannot control any of that. But the Stoics, Zeno, and later Epictetus, Seneca, Marcus Aurelius, they said there is always one thing you can control, one thing that is entirely and completely within your power: your response. Not the outcome, not the market, not what other traders do, but how you respond to what happens. And the state they described, the ideal mental state of a person who has mastered their responses, they called apatheia. The word comes from two Greek roots, a meaning without, and pathos meaning suffering, passion, or strong emotion. Apatheia does not mean feeling nothing. The Stoics were not robots. They were not advocating for emotional numbness. Marcus Aurelius, the Roman emperor who was considered the greatest Stoic who ever lived, was known to weep for his children, to feel the weight of war, to experience joy and grief and friendship as deeply as anyone. What apatheia means is this: your emotions do not make your decisions. You can feel fear and still execute the trade that your system says to take. You can feel excitement and still hold to your position sizing rules. You can feel anger after a loss and still close the laptop and walk away instead of revenge trading. The emotion is there, but it is not the driver. Reason is the driver. The system is the driver. The process is the driver. That is apatheia. And when I first encountered this concept and mapped it onto trading, everything I had struggled with for years suddenly made perfect sense. The Stoics were brilliant observers of human emotion. They cataloged the ways that destructive feelings hijacked rational thinking, and they gave them names. When I first read these names and descriptions, I realized they had perfectly and completely described the three ways that traders blow their accounts. Let me walk you through each one. The first enemy, epithumia. The Stoics called it epithumia. In Greek, it means craving, a desperate, consuming desire for something you do not have. In trading, we know it by a different name, FOMO, fear of missing out. Here's what epithumia looks like in practice. You're watching a currency pair, let's say the euro-dollar. You had it on your watch list. You identified the setup yesterday. The entry was clear, but this morning you hesitated, and now price is moving without you. And it's moving fast. In your trading group, people are posting their entries. The green pips are stacking up. You watch the candle extend further and further in the direction you predicted, but you are not in the trade. You're on the sidelines, watching other people make money from the exact move you saw coming. And something inside you breaks. You enter the trade, late, at a price that is nowhere near your original entry. Your risk-to-reward ratio is now terrible. Your stop is too tight because you're afraid to lose even more from the new entry. And the moment you enter, as if the market was waiting for you specifically, price stalls, reverses, and takes out your stop. That's epithumia. That's the craving for the trade, for the profits, for the feeling of being part of the move, overriding your rational judgment. The Stoics' cure? Marcus Aurelius wrote, "You have power over your mind, not outside events. Realize this, and you will find strength." The move that happened without you was never yours to take. A new setup will come. It always comes. The trader who has conquered epithumia does not chase. They watch, note it in their journal, and wait for the next clean entry. The market gives opportunities every day. Missing one is not a loss. Chasing one, that's a loss.
The second enemy the Stoics identified was Phobos, fear. Not the fear of a lion chasing you, not physical fear. The insidious, quiet, invisible fear that lives in the chest of every trader who has felt real loss. Here's the scene. You have a setup, a genuinely clean setup, the kind you have been waiting for all week. Multiple confluences align. The higher time frame supports the direction. The entry is at a key level. Your risk is defined. Your target is clear. Everything in your trading plan says this is a valid trade. And you cannot pull the trigger. Your finger is on the mouse. The button is right there. And you just sit and watch. And the setup plays out exactly as you analyzed it. The candle does exactly what you said it would do. Price hits your target. Without you. Why did you freeze? Because your last 3 trades were losers. Because last month was red. Because somewhere in your body there is a memory of the pain of losing, and your nervous system has decided, without asking your permission, that it would rather feel nothing than feel that pain again. This is Phobos, and it is just as damaging as Epithumia, but it is quieter, more hidden, and harder to diagnose. Epictetus, who was born into slavery, knew real suffering, and became one of the most important philosophers in history, said something that I want you to sit with. He is a wise man who does not grieve for the things which he has not, but rejoices for those which he has. The past trades are gone. They have no power over the present trade unless you give them that power. The loss last week is not in this chart. The red month is not in this setup. This is a new moment, a new decision, and it deserves to be treated as one. Phobos is always about the past. Apatheia brings you back to the present. This trade, this setup, this moment. Nothing else. The third enemy, Thumos. And this is the most dangerous one, the one that can wipe an account in a single session. The Stoics called it Thumos. Thumos is rage. It is the burning, righteous, consuming anger that rises when you feel that something unjust has happened to you. And nothing in trading triggers Thumos more reliably than a well-executed trade that still loses. Think about it. You followed every rule. You had your setup. You entered at the right place. You set your stop-loss correctly. You did everything right. And the market, indifferent, mechanical, emotionless, hit your stop to the pip and reversed perfectly in your original direction. The trade you were right about, the trade you planned correctly, the trade you executed properly. It hit your stop. And now there is something inside you that doesn't feel like sadness or disappointment. It feels like injustice. It feels personal, like the market owes you, like the universe owes you, like you need to take back what was wrongly taken. That feeling, that specific feeling, is Thumos, and it is the direct cause of revenge trading. Revenge trading is not a strategy. It's not even really trading. It's combat. You're going to war against an opponent that doesn't know you exist, doesn't care that you lost, and has infinite resources compared to your account. You will lose. Not because you're a bad trader, but because you're not trading anymore. You're feeling. And feelings, Thumos specifically, do not produce good trades.
They produce desperate trades. They produce oversized positions. They produce entries with no setups, targets that are too ambitious, and stops that are too tight or non-existent. Marcus Aurelius wrote this in his private journal, a journal he never intended anyone to read, in the middle of leading the Roman Empire through war, plague, and political crisis. How much more grievous are the consequences of anger than the causes of it? The loss that caused your anger was, let's say, 2% of your account. The trades you take in anger will cost you 5, 10, 20%. The consequence of Thumos is always worse than what created it. When you feel Thumos rising, the Stoic answer is the same as it always is. Stop, breathe, walk away. The market will be there tomorrow. Your account, if you let Thumos run unchecked, may not be.
Now, I want to be honest with you about something. Everything I've described so far, the three enemies, the concept of apatheia, this is not difficult to understand. Most of it probably feels familiar. You have felt Epithumia, you have felt Phobos, you have almost certainly felt Thumos. Understanding the problem is easy. The hard part is building the actual practice that changes your behavior at the level where it matters, not in your conscious mind, but in your nervous system, in the moment when the charts are moving and the emotions are flooding in and the mouse is in your hand. The Stoics were not just philosophers, they were practitioners. They did not just write about apatheia, they trained it daily through specific exercises. And those exercises, adapted for trading, are what I want to give you now. There are 3 of them. Practice 1, the pause. Before every single trade you take, before you click the button, you pause for 30 seconds. Not 60, not 5 minutes, 30 seconds. During those 30 seconds, you ask yourself one question and you answer it honestly. Am I taking this trade because my system says to, or because I feel something? That is it. That is the entire practice. One question, 30 seconds. If the honest answer is, my system says to, take the trade, no hesitation, execute cleanly. If any part of the honest answer involves a feeling, FOMO, revenge, excitement, boredom, anxiety, close the trade window. Walk away for at least 10 minutes, come back and look at the chart with fresh eyes. The Stoics called this practice proseche, which translates as attention or self-observation. It is the practice of watching your own mind the way you watch the market, looking for patterns, looking for the enemy. Epictetus said, first say to yourself what you would be, and then do what you have to do. Define what kind of trader you want to be before you act, not after. The pause is the simplest thing in this video. It is also the most powerful. I would estimate conservatively that 30 seconds of honest self-observation before each trade would eliminate 30 to 40% of losing trades for the average retail trader. Not because the setups are bad, because the decision-making is emotional. Practice 2, premeditatio malorum. This one sounds darker than it is. The Stoics called it premeditatio malorum, the premeditation of evils, or in modern language, the pre-mortem. Before you enter a trade, imagine it losing, fully, completely. See the stop getting hit. Watch the loss register. Feel what that feels like. And then, and this is the key question, ask yourself, if this trade loses, am I truly okay with that? Not okay in a dismissive way, genuinely okay. Can you absorb this loss financially without meaningful damage to your account? Can you absorb it emotionally without it triggering Thumos and leading to revenge trading? If the honest answer to either of those questions is no, you have 2 choices. You reduce the position size until the answer becomes yes, or you do not take the trade. This exercise does something profound to your psychology as a trader. When you have already imagined and accepted the loss before entering, the loss, if it comes, has no power to surprise you. There is no shock. There is no injustice. You already knew it was possible. You already decided you were okay with it.
And the emotional fuel for Thumos, the feeling of being blindsided, of being wronged, simply does not exist. You cannot feel robbed by something you were already prepared for. Seneca, the Roman Stoic philosopher, who was also one of the wealthiest men in Rome, wrote, "Nothing happens to the wise man against his expectation. He has thought out all possibilities in advance." Think out all possibilities in advance, before the trade, not during it, not after. The third practice is the one that Marcus Aurelius himself performed every single night, without exception, for the decades that he reigned as emperor of Rome. He would sit alone, away from the court, the advisors, the noise of empire, and he would review the day. Not his decisions, not his tactics, his emotional responses. He would ask, where did I let Epithumia drive me today? Where did Phobos make me hesitate when I should have acted? Where did Thumos speak louder than reason? And he wrote it down, honestly, without self-punishment. The journal was not a confession. It was not a record of failures. It was a training log. An athlete reviewing footage of their performance to find the patterns, the weaknesses, the places to improve. That journal became the book Meditations, one of the most widely read books in human history, written by one of the most powerful men who ever lived, not for an audience, but for himself. A nightly conversation with his own better nature. For you, the evening review looks like this. At the end of each trading day, whether you traded or not, spend 5 to 10 minutes with a journal and 3 questions. 1. Did I take any trade today because of epithumia, chasing, FOMO, the need to be in a move? 2. Did I miss any valid setup today because of Phobos, fear, hesitation, the memory of previous losses? 3. Did Thumos appear today? Did I feel the urge to revenge trade, to double down, to fight the market? Write the honest answers, not to judge yourself, not to feel bad, but to see the pattern over time. Because the pattern, once you can see it clearly, loses its power over you. Epictetus said, "Make the best use of what is in your power and take the rest as it happens." The review is how you figure out what is in your power. The emotions themselves, they come and go, but how you respond to them, that is always in your power. And the review is how you get better at it, one day at a time. I want to end with something that might feel uncomfortable. Most traders, right now, tonight, are looking for the next strategy, the next indicator, the next system that is going to finally make everything click. They will buy a new course, they will join a new community, they will find a new mentor who promises a new method, and some of those things will have real value. There are good strategies, there are good systems, but none of them will work, not one, for a trader who cannot control their emotions. Because every strategy has losing trades. Every system has drawdown periods. Every method requires you to take losses with equanimity and wait for the edge to play out over time. And if Epithumia, Phobos, and Thumos are running your decisions during those hard periods, no strategy will save you. You will abandon it at the worst possible moment and search for the next one. This is the cycle. This is the trap. This is why most traders never become profitable, not because they lack knowledge, but because they lack apatheia. The ancient Stoics did not have trading accounts. They had something harder. They had wars, plagues, political betrayal, slavery, exile. They had the full spectrum of human suffering and chaos. And what they built to deal with it, apatheia, prosoche, premeditation malorum, the evening review, it is as applicable to a chart as it was to a battlefield, because in both cases, the chaos is external, the control is internal, and the only real question is, how well can you know yourself? The trader who knows their emotional patterns, who can see epithumia rising and pause, who can feel Phobos and act anyway, who can sense Thumos and walk away,
That trader has an edge that no indicator can give you and no course can teach you. That edge is Apatheia, and developing it is the work of this channel. I will see you in the next video. You have power over your mind, not outside events. Realize this, and you will find strength. Marcus Aurelius.